Hello everyone and welcome to today's webinar. This is the third in our COVID-19 series. So just to start with, I'm just going to cover some of the housekeeping. If you are unable to hear me or if you've got any issues accessing the webinar, you can dial in via telephone. The details are now on the screen and they're also in the link to the webinar. Technology issues. So I'm going to apologize in advance. I have a lot of screens open at the moment. So if there are any technology issues, I do apologize in advance. I'm also working from home, as many of us are, so I am on my home broadband. So if there are any issues, I apologize in advance. Please feel free to ask any questions as we go via the chat portal within the GoToWebinar. I will answer as many as I can at the end of the webinar, but if you do feel like you'd want to just ask me a question direct, my email address is also on the screen, louise.casey@mitchellcharlesworth.co.uk, so please feel free to contact me afterwards. This webinar is being recorded and will be circulated to all attendees and also be live on our website at the end. Okay, so a little bit about me as your speaker today. For those of you that don't know me, my name's Louise. I am an associate at Mitchell Charlesworth and recently appointed head of audit. I've been with Mitchell Charlesworth now for 8 years, having trained over in Manchester. My portfolio is a real mixed bag of audit and non-audit clients across a number of sectors, predominantly companies, charities, and some academies. As part of my head of audit role, I work across the practice, helping with the training and development of staff and looking at audit innovation and service delivery. So a little bit about Mitchell Charlesworth. So for those of you that don't know, we are based in the Northwest. We have 4 offices in Liverpool, Chester, Manchester and Widnes. We're a very partner-led firm and all of our partners have a general portfolio, and really it's very partner-led, so from top down, giving a real personal service to our clients. In relation to our areas of expertise, particularly in the audit sector, we have academies, charities, manufacturing companies. We do quite a lot in the leisure and tourism industry, and also pension schemes and solicitor accounts rules. Our philosophy, we do want to be more than just your accountants, and hopefully those of you who are clients at present will appreciate that. Okay, so an overview of what we're going to be looking at today. So firstly, we're going to explore some of the financial reporting considerations arising as a result of COVID-19. We're going to have a look at the impact on the audit process. We're going to have a look at how us at Mitchell Charlesworth have adapted our processes to enable the remote auditing during this unprecedented time. And then look at some of the challenges and how we look to mitigate those. Finally, we're going to have a look over how you can prepare for the audit process, and we'll then open up to a question and answer. So before we start, I'm just going to ask some of you to conduct a quick poll. Now, I do apologise that not everyone's going to have access to this, but you should now see on your screen a question. So hopefully everyone can see that. Do you think your financial statements will require enhanced disclosure in relation to COVID-19? So if you could respond to that, we'll just give a few seconds for everyone who can do so to answer that. Okay, a few more seconds. And we will have a look now at what the answers to that are. Okay, so quite a mixed bag there. So a lot of you saying yes, you do think your financial statements will require enhanced disclosure. Some maybe, and a few of you no. I'm just going to make a note of those answers. Okay, so if we go back to the slides now. So let's have a look at some of those financial reporting considerations and how we think that they could potentially impact your organisation. So I think the first thing I would always like to emphasise here is if you're unsure, please ask. You know, we pride ourselves on giving proactive advice right through the audit process. So the earlier that you come to us with any queries or questions around your financial reporting, the more proactive we can be in giving that advice and support from the start. So to some degree, the applicable reporting standard that you follow is going to influence some of your decisions around the financial reporting process. Given that the majority of our clients do follow UK GAAP and therefore FRS 102, I have focused on this reporting standard for the discussion we're going to have. Would just like to note there that under FRS 105, so being the financial reporting standard for micro entities, these accounts, due to the nature of them, will probably not need any additional disclosure, and it's highly unlikely that they would be subject to audit anyway. Okay, so from a starting point for consideration, it's going to be, is COVID-19 an adjusting or unadjusting event? So this is really going to be based on when the year end falls. So information which comes to light after the balance sheet date, that's going to provide evidence of conditions that existed at the balance sheet date. So these are going to be your adjusting post-balance sheet events. And these should be reflected in the amounts recognised in the accounts. So information indicative of conditions that arose after the balance sheet date. So these are going to be your non-adjusting post-balance sheet events. These are going to be required some disclosure when material, but it's not going to affect the measurement of amounts at the balance sheet date unless the business has ceased to be a going concern. So whilst for 2019 year ends, including December 19, there is a general consensus that COVID-19 is a non-adjusting event. Even greater judgment will be required for periods ending within 2020. So whilst each entity is going to require its own individual considerations around the impact of COVID, additional disclosures are going to be required within the accounts, and we see this as a minimum being reference to COVID-19 within the director's report or strategic report. So for large companies preparing a strategic report, there's going to be far more expectation of a lot more detail as to what the company has done, how it's been impacted, and what it's doing to remedial action they're going to take. We're also probably going to have a far more enhanced going concern policy. And finally, we will definitely have inclusion of a post-balance sheet event note. Here detailing what COVID-19 is, again, the impact on how the entity has managed those risks, what measures have been taken, along with any material post-balance sheet events. For example, devaluation of investments or impairment of debtors. So whilst we consider those things, we would like to just highlight that going concern is going to be one of the biggest areas of disclosure needed. So an entity is a going concern unless management either intends to liquidate the entity or to cease trading, and realistically there is no alternative but to do so. So when assessing whether the going concern basis of accounting is appropriate, management must take into account all of the available information about the future which is at least, but not limited to, 12 months from the date of the audit report. Now that's really important. It's not the date of the year end, it's the date of the audit report. Those 12 months must cover. So the impact of COVID-19 must therefore be reflected in the going concern assessment for all accounts not yet authorised for issue, even if the year end is on or before the 31st of December. If the business is not a going concern, adjustments may be necessary to the carrying amounts of assets and liabilities within the final statements. Okay, so we'll now have a quick look over some of the areas of particular focus, and it will come as no surprise that the fair value assessments are the first item on the list. So when assets are measured at fair value, for example, property or investments, there may be difficulties in determining what that fair value measurement is. So either physical inspections might not be possible, or there may not be an active market at the balance sheet date. As part of that, we'll consider tangible and intangible assets. And obviously, COVID-19 does mean that many businesses are not able to operate as normal. This, combined with the negative impact on the economy more generally, has meant that there's likely to be indicators of impairment to the extent that those conditions existed at the balance sheet date. In such circumstances, the entity will need to assess the recoverable amounts of the assets affected, and even when the assets are not considered to be impaired, residual values and useful economic lives may still require assessment. Okay, we'll also look at stock. Now, obviously, stock's measured at the lower of net realisable value and cost. And stock will need to be written down when the estimated selling price less cost to complete and sell is less than its carrying value based on the conditions that did exist at the balance sheet date. This will be particularly relevant when stocks have a short shelf life or where there's likely to be long-term reduction in demand for a product. And then finally, just on the assessment of fair value and potential impairment thereon, is looking at debtors. Now, many of you will provide for bad debts at the year end, but provisions against debtors probably will need reviewing more carefully under COVID. For example, if there's evidence of significant financial difficulty of a debtor and/or failure to pay debts when they fall due. The adverse market conditions can also be evidence of impairment in this case, and if debts have been renegotiated, reclassification or remeasurement might be needed within the financial statements to reflect new contract terms. Okay, so we'll just have a look at some of the other financial reporting considerations. So firstly, onerous contracts. Some contracts that may have previously been considered profitable or by the very least break even may now be considered onerous. So therefore, a provision will be required for any present obligation at the balance sheet date. But it's really important to note that a provision for future operating losses is not permitted in line with the accounting standard. Restructuring provisions. So here, many entities may now be reviewing their operations, for example, reducing staff levels, reducing certain operations, or selling some of the company's assets. A restructuring provision must be recognised only to the extent that there is a constructive obligation at the balance sheet date, alongside the general recognition criteria for provisions. The next one on the list is around bank loans and covenants. So bank and other loans may require reclassification or remeasurement if terms have been renegotiated at the balance sheet date. For example, you might want to consider a transfer from non-current to current liabilities or a recalculation of implicit interest rates. Government grants, so many of you may already account for government grants. Those of you who haven't had government grants in the past, this might be completely new. So we've got to consider both the accounting policy and the financial reporting impact. So whilst the government has introduced a range of initiatives, for example, the coronavirus job retention scheme, business rates holidays, and specific grants for certain sectors, these should not be recognised until there is reasonable assurance that they will A, comply with the conditions attached to those grants, and also the probability that the grants will be received. So something new there for businesses that haven't before had government grants to consider, particularly around the recognition criteria and the cut-off recognition. The final point on here I've added is around taxation. Now, HMRC have offered a number of deferment schemes around certain taxes, one being VAT. And so the classification between current and non-current may need to be reconsidered in relation to those liabilities. So these are just some of the areas that I wanted to highlight from a financial reporting perspective. And as mentioned, each entity will need to consider its business, the transactions and contracts it's entered into, the environment in which it's operating, and deeming what might be material to the users of those financial statements when determining what the impact of COVID-19 has been on them. So having explored the financial reporting aspects, let's turn our attention to the impact on audit. Now, firstly, it will come as no surprise that our risk assessment under COVID-19 is going to be heightened, and it will change significantly as the days, weeks, months go by. We'll require a detailed update right up to the point that we look to sign off the audit report to remain applicable. So our focus on the risk assessment will include both financial reporting risk, being centred predominantly around our going concern assessment, impact on the organisation's balance sheet and post-balance sheet events, but also the inherent risk. So this is looking at the organisation's systems, controls, and the ability to appropriately adapt to the new way of working. We'll need to assess key aspects of our audit as a result of the fast-changing situation, and therefore it's really important that as clients you recognise that this assessment will take place right up to the point of signing the audit report, and the provision of further evidence and information may be required from management right up until this time. So that's a bit different. Obviously, under usual circumstances, our risk assessment is established at the planning. And so long as there's nothing that changes that risk assessment arising from the audit work, our risk assessment doesn't really change. In this case, we're going to have to assess that risk right up to the date of the audit report. So it's also going to impact audit from the perspective of gathering evidence. So many audit systems can now be accessed remotely, but the real struggle is going to be not being able to attend our clients' offices. So we've had to establish new ways of working, designing our audit approach to ensure we maintain audit quality and obtain appropriate audit evidence. So we've implemented some tools to assist in our remote auditing, which will be discussed on the next slide. The biggest challenge we see in gathering evidence is the inability to discuss across departments as we would whilst on site, and also obtaining the physical verification evidence, along with our audit work to detect understatement of balances. So this is where we're looking for what isn't there. The physical verification of assets, stock take attendance, systems work is obviously really imperative to our audit conclusion. And where we cannot gain sufficient appropriate audit evidence, then a modification to the audit report may be needed. To overcome these challenges, we have been working closely with clients to devise alternative verification methods, for example, video calls and screen shares, which I'll go into a bit more detail about next. So far as the impact on audit is concerned, and we've already touched upon the financial reporting aspect of valuations, the audit impact is also there. Many valuations could become difficult, either because active markets no longer exist or experts are actually unable to attend sites to perform their work, or they may even just caveat their findings due to the level of uncertainties that exist. So as auditors, we need to look carefully at any valuations to consider whether they are reliable enough, whether they potentially need to address new risks, or maybe even design alternative procedures in order to obtain the right level of assurance we need to conclude on the audit. There could also be difficulties in carrying out impairment reviews, which require forecasts. So this is when we're looking at the impairment of potentially goodwill, and the ability to generate reliable forecasts to adequately respond to that risk. Now, the biggest thing on the valuation is that this is going to probably dramatically change from what's been done in previous years. And even if they were prepared probably even a few weeks ago, they'll still need updating to remain applicable. So the assessment and judgment of estimations, particularly in relation to COVID-19 assumptions. So this is a really difficult area, and to be honest with you, this is probably one of the most difficult areas, even without bringing COVID into the mix. So under COVID, the level of uncertainty and therefore impact on management judgment is really difficult, especially with the ever-changing landscape. So we're going to work with clients to really understand what judgments and estimations have been used and perform our audit procedures to test those assumptions to make sure that they can be relied upon. As we've already mentioned within the financial reporting section, accounting for subsequent events is going to be one of the major audit risks. So we've already covered whether it's an adjusting or non-adjusting event. So for March year ends, adjustments will need to be made, and even in January and February, events may need adjusting depending on the situation. As part of our audit planning, we have and we will be working with clients to ascertain the impact of post-balance sheet events and the necessary disclosures required. We will also assess the adequacy of the disclosures made by management about the impact on the company of COVID-19, so that users of the financial statements are properly informed and the company's prospects and how they might be affected are described, recognising the high degree of uncertainty arising. Linked to this, and again going back to our going concern, so one of the prime considerations here is going to be the viability of forecasts that have been prepared, and our risk assessment in this area is going to be elevated as a default. So we'll discuss how you can prepare for this later in the webinar. We've also got the impact on the audit report, or the potential impact on the audit report. So it's highly likely that in some situations, we may need to issue either a material uncertainty paragraph in relation to going concern or an emphasis of matter paragraph. I would highlight that such modifications are not necessarily qualifications. An example is the inability to gather sufficient appropriate audit evidence before the date of sign-off. But I would like to emphasise here that this would never be a default position, and we will really work with our clients to make sure that we've designed the procedures so that we can obtain the necessary evidence to form the appropriate opinion. Also, just to consider, linked to the audit report and sign-off date, is the key reporting milestones of your internal audit and meeting cycles. In order to meet these, it's imperative that we maintain open communication and set out key deliverables from the outset of the audit process. And finally, a quick point just around group audits. We have always prided ourselves in working collaboratively in both giving and also delivering appropriate evidence to component auditors, and we will continue to do so remotely as far as we can in order to avoid any modification to audit reports in this respect. So we've just got another quick poll, if I can just get this up for you. So here we're going to look at how you feel as a general to the potential of a remote audit process. So you should now see that on your screen. Again, apologies for those that cannot access this or respond, but for those of you that can, if you could please select one of those, and we'll just wait a few seconds and see what the general consensus to the attitude to remote audit is. Okay, we'll close that poll there. Okay, so majority of you do feel quite positive towards the remote audit process, some indifferent and some negative. Well, if we go back to our slides, we're now going to explore what Mitchell Charlesworth have done in order to adapt our processes, especially given the impact of COVID-19 now. Okay, so first thing I'd like to say is that we are committed to developing our audit approach, and this hasn't just been as a result and a response to COVID-19. We've actually, over the last 3 to 4 years, invested quite heavily in technology and in innovating our audit procedures. So I would like to emphasize at this point that even though we have done these things, and that I'll run through now, in order to assist the remote auditing process, it will always be our preference and our desire to be on site in order to deliver our on-site fieldwork. That is not going to change indefinitely, but whilst we are limited to the access we can have to clients on site, some of the areas we've developed have greatly assisted. So the first thing that we've done, and this is going back a few years now, is we've moved our audit processes to be completely paperless. So we use our audit software to plan, deliver, and document all of our work. And so we're able to work as a team really effectively, and also give visibility and engagement to the audit team, which is essential to ensuring that the audit evidence is gathered, analysed, and evaluated in real time. Through this software, we can also work as a team to adequately design our procedures against the risks identified. So video conferencing platforms, again, something that we've implemented, not necessarily as a direct result of COVID, but coincidentally at a similar time, is that all of our employees now have access to Microsoft Teams. So this is really enabled to use this sharing platform to communicate daily with the audit team and to make sure that the management and the partners are really engaged in the audit process. So we can maintain regular contact with the audit team, but also still hold all our planning meetings, debrief meetings, and even when the fieldwork's ongoing, making sure that we're speaking daily to make sure any issues arising are addressed nice and quickly. So it's also given us the ability to work with our clients on video conferencing platforms. Examples might be where we've used Zoom or Skype to conduct on-screen walkthroughs of systems via screen sharing, or where we've used video conferencing via FaceTime to perform stock takes in real time. So we've also been looking at ways in which we can conduct physical verification of assets via, date marked photographs, for example. So technology is really playing a really big part of how we are delivering our audit during this time. So in relation to internal quality measures, we have enhanced our quality control reviews during this time through second partner reviews and consultation around key risk areas. We've also made sure that there's regular team updates and manager and partner involvement, as always has been the case, from the start right through to the end of the process. Whilst we adapt to this new way of working, we've also collaborated really closely with our colleagues across the Creston network to ensure that we're sharing best practice and also ensuring that our audit quality is not compromised whilst we are having to amend the way in which we are working. So the other items that we have also undertaken over the past 12 months is going into partnership with Inflow. And this is where we see the real added value for adapting to the remote auditing. And it's a cloud-based information request portal. Now, this software allows us to give transparency to both the audit team and our clients, whether that be in relation to information requests, status of the requests, and also the workflow. And I think this visualization has really been quite a welcome change for both us and our clients. The system also allows us to access 100% of accounting entries through the data exchange upload, meaning that we can plan our samples and instigate requests remotely and efficiently. I think as a result, we are working more collaboratively with clients on any device with any accounting software and from anywhere. So you can see on the slide there's a bit of an example of what the Inflow data request looks like. And many of you who are existing clients will be quite familiar with our information requests that we send out as part of our audit planning. This just means everything is in one place and avoids back and forth of emails, especially when we are trying to work as efficiently as we can remotely. As part of Inflow, we are also able to fully integrate the full accounting data set. And this enables us to both address our risk assessment and also allow for identification of higher risk entries to include on our audit samples. As I've mentioned, this has been really beneficial whilst we've been working remotely, facilitating the information flow for all parties and also enabling risk-based selection of samples. We are also able to integrate this into our testing of the control environment and use tools to highlight abnormalities in postings for management. So they're just some of the areas that Mitchell Charlesworth have been looking at. So this isn't going to be without challenges. So we're now going to explore what we perceive those challenges to be and how we have linked that to the measures we've taken to mitigate those. So firstly, here we have managing client relationships remotely. So I think there's probably a fear, and that's probably on both parts, that the communication between us and you, our clients, is going to be impacted by the idea of remote auditing. So the lack of interaction, the ability to ask questions face to face will of course be a challenge. But we feel like we've overcome these so far by ensuring that we engage with our clients via telephone or video calling early in the audit process and ensuring that everyone is kept fully up to date as to audit progress, findings and deliverables. So the second challenge I've identified here is managing the audit team remotely. Now, one of the biggest things here is the process adaptation that we've implemented, use of Microsoft Teams, but also ensuring that the way we work hasn't changed. So basically, still having manager reviews as part of the audit fieldwork process and not after that fieldwork is in essence completed. And I think you'll probably not be surprised if I actually told you it's probably led to more enhanced communication across the audit team and a lot more collaboration with managers and partners across these platforms. So the third item here is the access to documentation and quality of audit evidence. So we've already identified that gathering documentation whilst not on site is going to be challenging, and it may result in time lags or even misunderstandings as to what information is actually needed when we're not sitting next to people. So engaging early in the audit process and the use of inflow, this will really, really help in assessing and understanding both the audit deliverables and setting clear deadlines for both us and our clients. Physical evidence will be more difficult, there's no doubt about that, when we're not on site. But as we've explored, we have now completed some of this via video calls, screen shares, and taking photos of assets, for example, and doing walkthroughs via screen share. I would like to emphasise here that audit quality will always be at the forefront of our procedures, and as such, finding what isn't there is going to be more challenging. But as we've adopted our new approaches, such as the use of inflow, this increases our coverage and also focuses our testing on the riskier transactions, which will hopefully mitigate this challenge. The discussions that we would usually have on site, and this isn't just necessarily with the finance team, because predominantly we will discuss with payroll departments, operations teams, quality departments about how things are going, understanding the systems and processes, getting progress updates and other areas of the business. And that's really still important to integrate into our inherent risk assessment and really getting to understand the entity. How are we going to mitigate this? Well, early in the planning process, it's identifying who those individuals are, who are the key management that we would usually liaise with outside of the finance team, and making sure at the planning stage we're diarising meetings early in the process to make sure that those people are available to speak to us when we would usually be speaking to them. Finally, audit process cohesiveness. I think there's a real fear, both for us and our clients, that the audit process and maintaining the cohesiveness is going to be difficult. I think this is relevant for both our internal procedures and also the focus on getting our fieldwork completed within the allocated time. So firstly, to address our internal workflow procedures, we hold regular team updates via Teams to promote collaboration across the audit team. We will maintain our fieldwork scheduling and also, as I've mentioned, our approach of manager review, and this happening towards the end of the fieldwork instead of after the fieldwork's completed, to ensure that the information flow is maintained and everything is obtained while the audit is in process. It also allows for meaningful discussions within the fieldwork allotted time around findings, potential adjustments, and of course the additional disclosures and impact of COVID-19. So how can you prepare for the audit fieldwork process in these unusual and challenging times? Well, I've put together some tips as to how you can prepare for the audit process. So for the remote audit to be successful, planning is really key, and it requires the support and collaboration of both us and you. Preparing for the audit and collating deliverables should be completed before the audit fieldwork is scheduled to start. So pre-audit planning meetings should be held on an agreed platform to ensure that the audit process is communicated and understood, including the expectations of when and what information is required. As part of this, we'll probably want to test and agree the communication platform to be used. As mentioned, Teams and Zoom appear to be the most widely available at the moment and offer the potential for both voice, video and document sharing on screen. But testing of this is really paramount to make sure that we are working as efficiently as possible. No one wants to spend the first 15 meetings of an opening meeting trying to resolve connection or technology issues. Engagement with the use of Inflow. So as we've covered, this is really to centralise the deliverables and give visibility, and it will assist, but it's really vital that there is continuous communication throughout this process and that you really engage with it. Concerns probably exist for the sharing and control of documents, but to cover off those concerns, whether they be centred around data protection or security and control, I'd like to emphasise that we have really selected our partnership very carefully, and in identifying Inflow as the software that we've wanted to partner up with, we've used the expertise of the Creston network and also drawn upon their involvement with the ICAW to make sure that we've really carefully selected that partner. The other thing that you can do that will really help the audit process is allocate time to spend with us. So pre-diarising daily calls and system walkthroughs and control reviews via the screen shares, making sure that they are all diarised within the field work week. So having an understanding that it is vital that we have sufficient time and support to carry out our work just as we would as if we were on site, including any reassessment work to be done to reflect the changed circumstances. Okay, and the next point is probably a bit more of the work you can do in gearing up for the audit process, and that's in preparing detailed forecasts with outline assumptions and to some degree sensitivity analysis to assist with our going concern evaluation. So the impact of COVID-19 on the company's operations, what government assistance has been utilised, what recovery plans are in place if needed, will all really impact our risk assessment, but also your ability to provide us with the right level of data needed for us to reach our assumption. You'll probably want to create a best worst case scenario, and I'm not sure if any of you were on our earlier webinar last week. We've covered cash flow forecasts and budgeting, so if you've not seen that yet, it might be worth a watch, and it is available on our website. And then the final points that I'd like to highlight on preparing for the audit process is speaking to experts early, whether that be property valuers, actuaries, and also including us in these discussions so that we can ensure our audit requirements are met and can be integrated into the work that they're doing. And we can also preempt any issues that may arise, both logistically and also the ability to measure fair value and make sure that we're getting the appropriate audit evidence. So, as I started with, for us, the most important thing is to ask questions. Ask us, maintain the communication channels, involve us in financial reporting decisions, and use our expertise to assist you, particularly around that year-end period. So that's me done from the structure of the webinar. I am going to ask you just to complete the 2 polls that we've raised at the beginning, just to try and understand if you have changed your opinion in relation to any of them. So the first one is just revisiting whether you think your financial statements will require enhanced disclosure in relation to COVID. So I'll just give you a few seconds to complete that. Okay, so let's close that one then, and let's see if there has been any change. Okay, so we have got more people saying yes, slightly less saying maybe, and actually more saying no. And I think for those who are saying no, I think by the default is if you are producing financial statements with a December 19 or thereafter year end, the likelihood is we are going to have to give some enhanced disclosure, particularly around post-balance sheet events and going concern. Okay, so I'm going to ask you now to have a look at the second poll, which was in relation to how you felt about the remote audit process. So I'll just give a few seconds there to cover off how you now feel about the remote audit process. Okay, a few more seconds. Okay, and we'll close that poll. Okay, so the positive response has shot up quite a bit. Neither positive or negative has reduced, and the negative has remained the same. Okay, so that's a positive that maybe some of the things that we are putting in place are giving a bit more comfort around that remote audit process. And as I said, we will work closely with each individual client to make sure that we really do address their specific risks around the remote audit. Okay, now just going to go back to the final slide, which will give people the opportunity to ask any questions. Okay, so I'm just going to check because I am getting some questions through on a separate. Okay, so the first question that I've got is around extra work that will be required and what will happen with our fees in this respect. Now, there's not going to be a broad brush approach to this. I would say that, yes, there is likely to be more work on our part around getting comfort from going concern. But as you'll see from the final slide, if you've prepared for that and given us the information that we need to make that assessment, then the level of additional work hopefully wouldn't equate to additional fees. But I would emphasise that if we did perceive there to be additional fees, these would be discussed very early in the process. Thus far, the additional fees that we've charged, actually we haven't, because our clients have been prepared enough and given us the information we need quite early on in the process and have been willing to update that as they progress. So hopefully that's answered that question for you. Just going to check another one. Okay, so this is an interesting one. So another question was, once businesses get back to normal, do you think that some of the enforced changes of the audit process during COVID will be continued as a more efficient way of working? Now, I would say yes, but as I started with, I don't think we will ever replace the ability to converse on site, and that would still be our preference. Now, some clients may prefer the idea of remote working, and obviously we've now got the infrastructure in place to be able to do that, but our preference would always be to be on site. And whether that's for a reduced amount of time because we can do more remotely, I think that's a discussion we'd have with each individual client. And just check one more. Okay, another question in relation to fees. So hopefully I've covered that for you. Now, if you do have any questions that I haven't covered, then please feel free to drop me an email. My email address is on the screen. Or if you want to speak to your engagement partner, that's equally fine. But hopefully we've covered off some of your questions today and also given you a bit of food for thought as to what needs to be considered as part of or leading up to the audit process. Thank you very much, everyone, and I hope to speak to you all soon.